Okay, if you've been following me or you've been my friend or my Discord member for a while, you know that we make a killing in the stock market just buying and selling shares. We make several percent a day, and if you compound that, that's life-changing money. You can check out what we do at copyandwin.com. We win consistently day after day, week after week, month after month, year after year, and it's great. But there are ways to make higher percentage returns on a daily basis. In fact, mind-blowing profits and returns daily, and that's called options trading. Now, you've heard about options to be sure, and your friends, your family, the internet may have scared you and told you how dangerous and confusing options trading can be. They're right, to an extent. It can be dangerous if you don't use stop losses. It can be confusing if you let yourself overthink. But in the next few videos, let's just dumb it down, simplify it, and I promise you that in a couple of 5-minute videos, you'll know everything you need to know to not only decide how to trade, but to take a trade, an options trade. You'll know everything you need to know for sure to copy my trades that we call out every day in my Discord at optionscopier.com. Check out the Discord. You can see the flow. You can see the type of crazy, insane returns that are possible. And you'll hopefully also realize that you're going to have to lose sometime. Stock trading is a game of numbers. Nobody can win every trade, but our winning percentage is huge. We keep our losses low, and some of our trades get out of control, sky high. That's what I love about options. So, Rick, if I buy a $1 stock and it goes up to $1.10, I know I've made 10 cents on my $1 investment. I've made a 10% profit. True, great. Sometimes you can do that the same day. Sometimes it takes a few days, but to make 10% on a stock, wow. Most of your old school friends will tell you, be happy with 10 or 20% a year. And we do that in a day or a week at copyandwin.com. But what if that same 10-cent move could make you 40, 50, 60%, 100% or more, sometimes the same day, but certainly within a few days? Well, that's the leverage of options. So if you want to buy a stock because you think it's going up, you just buy the shares. If you want to bet that that same stock will go up, you can buy a call betting that the stock goes higher. And what's a call, Rick? Well, a call, each contract, is the right to control 100 shares of that stock. You don't own the stocks. You don't have to pay 100 times $100 per share and cost yourself tons of money. You simply pay a small, let's call it a contract price, for the right to rent those shares of stock and control them for the period of time that you choose for the stock to go up or down. And if those shares go up, your returns are phenomenal because you have leverage controlling 100 shares, often, in fact, almost always, much cheaper than the cost of a single share of that stock. It's crazy. Now again, if you're not careful, you can lose as fast as you win. Okay, Rick, I understand. If I buy shares and they go up, I make that percentage of return on my money. But if I buy contracts to control 100 shares and it goes up the same 10%, well, 10% per share would be 10 cents on one share, but I'm controlling 100 contracts, so I'm going to make a lot more money in the same amount of time. Very true. And that's the power of leverage. So buy a stock equals buy calls. You're calling the price up higher, and when it goes up, you make a lot of money. Okay, Rick, what about if I short stocks? I know how to short stocks, in other words, sell them. That same $1 stock, now I think it's going to go down, so I short my shares. I'm betting that they'll go down. And when the $1 stock goes down to, say, 90 cents, because I bet that it was going down, I make 10 cents. That's the same 10%. Great, perfect. You're right. That's exactly how you trade shares. You short the shares when you want to bet they'll go down. Same concept now, except instead of buying calls, calling the price higher, you can simply buy puts, putting the price lower. Important side note, you're still buying the contract. You're not selling the puts. So make sure you're buying puts. You're buying a contract to control that same 100 shares of stock, and you're putting the price lower. So for a fraction of a cost of a single share of that stock, you can again control 100 shares, and if the stock goes lower, you make that 100x leverage, roughly, on those shares. Now, There are certain factors that will control the amount of leverage you have, such as expiration date and strike price. We'll talk about those in the next few videos, but for now, just know this. You already know the concepts of buying and selling shares of stock, and now you know the concepts of how to trade options. You want a stock to go up? Just buy the calls. You think a stock will go down? Buy the puts. Easy. Couple more videos. We'll have you ready to trade. Love you.